Okay, let's go ahead and get started. It will take probably the full hour just because there is a lot to cover about May's comprehensive problem. I know Kayla has started hers, so I know that at least. So let's get going. Okay, so the first thing is an icebreaker, basic poll question. Then we're going to go over the directions for May's comprehensive. Take a look at the chart of accounts because, as I mentioned last week, this problem is going to have a lot more to it. Just because we're purchasing more assets, we're going to have more depreciation and more accumulated depreciation expense. So we're going to have a lot more adjusting entries at the end of the month. Go over some of the transactions that are more confusing that students do have trouble with. Go over the adjusting entries. We're going to focus a lot on straight line depreciation just because in May's comprehensive, you actually have to calculate all of the straight line depreciation yourself. April's comprehensive gives you the amount of depreciation for the boats, so you don't have to calculate the straight line depreciation, but in May you do. And so I want to make sure you know how to calculate that correctly. And also on your after conference assignment, there are some calculations for straight line depreciation as well, just to give you additional practice. Go over the closing entries. There is one tricky closing entry. Go over the financial statements, which are pretty standard at this point, and then do a wrap up, which goes over part of the information you need for the final exam, which is coming up very quickly. Finals actually start the 19th. So that's what? 10 days away, something like that. So about a week and a half is when finals start. So just to give you a heads up. So the question. Honestly answer the following regarding April's comprehensive problem, which is due Sunday night, excuse me. I have looked at it, I've started it, I have completed it, or I'm completely stuck and I've been meaning to email you. I've looked at it and I've started it. Good. Waiting till the last minute on April's comprehensive, never a good idea. As soon as you finish April's, I would highly suggest you go ahead and start May's. Just because May's has a little trickier transactions. So it's a little bit more confusing. So again, just like normal, email me, text me with questions. Those are usually the easiest ways to get in touch. If questions are sent to Harrison, I usually get back within 24 hours or sooner. If it's a text message, it can be pretty close to immediately, especially if I'm already on the computer working, because the text messages go to my cell phone and my computer as well, because it is a Google Voice number. So I get it multiple places at the same time. So, make sure I didn't miss anything. Okay, as you can see, the chart of accounts is a lot bigger this time than in April's. You are purchasing subscriptions, land, buildings, additional fishing boats, surround sound system, and a big screen TV. So you're going to have all of the accumulated depreciation and the depreciation expense accounts to go along with that. So it looks huge, but in reality, it's nothing different than what we've normally been doing. Okay, Kayla, I will look at your comprehensive that you sent me when we're done with the conference. That way I can get it back to you tonight. And then I will also be emailing you guys the passcode for the after conference assignment. So I'll do those at about the same time. Since I've been teaching the class for about 10 years, I pretty much have the comprehensive problem answers memorized, just because that hasn't really changed in the 10 years. With the same addition, with the additions being updated, the authors never really updated the comprehensive problems. So I have most of those answers pretty much memorized. So the directions are pretty much the same as they are for April. Since you've both started it, or you've at least looked at it, you've hopefully looked at the directions. The first step for May is you're going to enter in April's post-closing trial balance. What I'm doing for students that actually attend the conferences is I will give you the balance amounts that you should have for April's post-closing trial balance. One, that helps make sure you have the correct answers for April. Two, it gives you a good start for May's comprehensive, because you have to take those amounts from the post-closing trial balance and enter them into the general ledger for May as the beginning balances. If you don't know how to do that, definitely take a look at the Chapter 6 homework. I believe problem 6-8 in the general ledger shows you what a balance entry should look like. I'm pulling that up right now. Yes, it does. So essentially on the first line, you would put the last day of April as your date, the word balance, and then in the two far right-hand columns, you would put the balance, whether it's a debit or a credit. So essentially that's the only trick there is for that. So it is pretty straightforward. Journal entries, those are again pretty much the same. There's a couple entries that are more confusing. Like I said, we're going to go over 7 of them that are usually what confuses students the most. Again, you'll have the ledger, the trial balance, 10-column worksheet. Those are all the same. Adjusting entries, you're going to be calculating a lot of depreciation, which using straight line method isn't that difficult as long as you know the formula. Again, the appendix to chapter 5, if you get to that point and you can't remember the formula, the appendix to chapter 5 gives you the formula for straight line depreciation. Financial statements, it's the same thing as in chapter 6. So pages 197 to 199, I believe, is the demonstration problem. In chapter 7, great example of how your financial statements should look. And then the closing entries. So it's pretty much standard what we've been doing since week 6. No surprises. So are there any questions as of yet? Okay. Both of you guys have gotten really good grades, so I'm not too worried about how things are going. So here is the post-closing trial balance. You can either take a screenshot, I could send you a copy of the picture. You can jot down the numbers quickly. It's pretty much whatever's easiest for you. Would you guys like me to send you a picture of the post-closing trial balance? That way you have what it should look like. Okay, let me make myself a note. Horrible memory. Okay, I will get that out to you tonight as well. That way, if you get close to finishing April's tonight or tomorrow, you have that to go on. So that will all go out tonight. The picture will probably be attached to the email that has the passcode for the after conference assignment. So I will send those both out together. Okay, again, the journal entries can be quite tricky. There's some with wording that's confusing. And then again, don't forget to use April's post-closing trial balance. I've had students not do that, and usually they only get about 50% for May's comprehensive. And with this being due week 11, it gives you a week to redo it and complete the final exam and any missing or late assignments or redos that you want to get done. So it doesn't give you much time. So if you want to get started on May's quickly, take the picture, enter in the balances as soon as possible. That way you won't forget to do it later. So quick tip. So again, transactions, essentially the same. Since week 4, it's pretty much the same thing with the journal entries. Nothing out of the ordinary. There is one that people consistently mess up. The other 6 that we're going to go over are ones that are most consistently missed. So, and again, if you send me your file to look at it, I'll tell you which ones are wrong and point you towards the right direction. So it's not as if I'm not here to help. This is actually the first transaction in May. It's the first one that you're going to have to complete. In order to provide snacks for guests on a 24-hour basis, Knight signed a contract with Snack Attack. Snack Attack will install vending machines with food and drinks and pay a 10% commission on all sales. Estimated payments are made at the beginning of each month. Knight received a check for $200, which is the estimated commission on sales for May. So based on all of the nice wordy information you're given, what accounts are we going to use? Would it be cash and registration fees, accounts receivable and registration fees, cash and vending commission revenue, accounts receivable and vending commission revenue? So what would we use? Okay, this one is split. Okay, so the reason I throw this one in is because it is missed a lot. We received, a check. So that's going to be accounts payable. I'm sorry, that's going to be cash. If it's on account, it's going to be accounts receivable or accounts payable. But since we received that check, it's going to be cash. So that automatically limits eliminates B and D. So in this case, it is C. It's vending commission revenue. And this is where your closing entries get a little tricky. If you remember the acronym where we're closing revenue accounts first, instead of just having one revenue account, we're going to be closing two. So you're going to have two debits. So you're going to have a debit to registration fees and a debit to vending commission revenue. And then you will credit the total of those two amounts to income summary. And then this is also going to be used for an adjusting entry as well. So are there any questions on why this one is cash and vending commission revenue? Okay. Again, these transactions are the ones that are more commonly missed by students every quarter. So on this one, we paid for May's programming on the new digital satellite system. So if we're paying for a satellite system, what are we going to do? Use cash and satellite programming, cash and satellite programming expense, accounts payable and satellite programming, or accounts payable and satellite programming expense. Great job. Exactly right. It's similar to paying your phone bill or your cable bill or your gas bill. Exact same principle. We're going to go cash and satellite programming expense. Let's see. This is another commonly missed transaction. Knight's office manager returned $100 worth of supplies to Gordon Office Supply. Knight received a $100 reduction on the account. So what would we use to show this transaction on the journal? Office supplies in cash, office supplies expense in cash, office supplies and accounts payable, or office supplies expense and accounts payable. And if you're not taking notes, or if you want to rewatch this conference when you get to doing May's Comprehensive, you should have this available to you probably tomorrow afternoon. So what two accounts would we use when we're returning supplies? Okay, this is a 50-50 split. So you guys have C and D. This one is actually going to be office supplies and accounts payable because that's what we're returning. We're returning office supplies. You're mainly going to use the office supplies expense account when you're adjusting the accounts at the end of the month or the end of the period to show how much office supplies were used during that time. In our case, our periods last a month. In some businesses, their accounting periods could last 2 weeks, 3 months, 6 months. So it'd be however long their period is. So does that explain why it's not an expense? Okay, be honest if it doesn't. I want to make sure you guys understand the problem and make sure you can get the best grade on it. The next transaction, we paid May's insurance premium for the new camp of $1,000. So how would we record this? Would it be prepaid insurance in cash, insurance expense in cash, prepaid insurance in accounts payable, or insurance expense in accounts payable? For paying a premium for the new camp. Okay, again, this is a 50-50 split. This one is actually going to be insurance expense in a cash, because in April we're purchasing, I believe, $6,000 worth of insurance. And that's supposed to last us 6 months, or is it 9,000? It's some ridiculous amount of insurance. And so we've already paid it in April, so we just need to show that we're using an extra $1,000 up. So we may have to pay in the future. We may be short $1,000, but as it stands at this point, we're going to credit insurance expense. Sorry, we're going to debit insurance expense. So that's going to show that we're using what we've already paid the insurance company. This is one students read quickly. They see an amount and they automatically assume they know what the answer is going to be. So Knight paid $40 for each 1-year subscription to Fishing Illustrated, Fishing Unlimited, and Fishmaster. The magazines are published monthly. How much is our transaction going to be for? $40, $80, or $120? In this class, it pays to go slowly and read carefully. So how much is our transaction going to be? We're going to use prepaid subscriptions in cash. Exactly. A lot of times students are in a hurry, they don't read clearly, they see the number 40 and they go, "Oop, that's the number." And so they automatically enter that in. If you do that, your your adjusting entry at the end of the month would be off. And so that would throw additional issues into your problem. So make sure that is for $120 when you do that entry. This is the one that is missed by about 99% of all students. We paid wages to fishing guides of $30,000. Don't forget the wages payable. So what accounts would we use here? Would we use wages expense in cash, wage expense and accounts payable, wages expense, wages payable in cash, or wages expense, wages payable and accounts payable? This one is a tricky one. Exactly. You guys both got it. With the, I believe, $500 left in accounts payable, at the end of April, we have to use that amount first. That needs to get to a zero balance before we go to wages expense. So you're going to have two debit amounts and one credit. So it would be all one transaction. So you would have your wages payable for 500. You would have your cash for 30,000 as a credit, and your wages expense would be the difference between the two amounts. Does that transaction make sense? That is one that is commonly missed. Okay. Last transaction that we're actually going to go over. A guest became ill and was unable to stay. They were issued a refund of $1,000. So what accounts would we use to issue a refund to a client? Would it be cash and registration fees, accounts receivable and cash, or accounts receivable and registration fees? Unfortunately, I hate to say this, but unfortunately, you're actually both incorrect on this one. That's why I throw this one in. So we issued $1,000, which means it's not going to be accounts receivable, and therefore it can't be accounts receivable up here. Since when a client pays us money, we credit it to registration fees, we credit to our revenue account. Since we have to return that money to them, we're going to actually decrease our revenue and decrease our cash account because we no longer have that $1,000 since we gave it to a client. Does that one make sense? I know that's kind of an unusual one that we don't normally deal with. So it's kind of like if you paid for your kid to have private lessons for the piano and you paid 3 months in advance. You paid 3 months all at once up front for piano lessons. Your child does it for 2 weeks and the teacher's like, or your child's like, I can't do this anymore. Normally, at least hopefully, you would get the refund back from the piano teacher. So it's kind of like that. Or you're trying a new service, a new streaming service for your TV, and you don't like the programs they have, so they give you 7 days to cancel. They hold the amount on your debit card, credit card. You cancel it, you get your money back, they lose revenue. So it's very similar to that. Okay. Adjusting entries. Everyone's favorite part of any accounting homework, I know, adjusting entries. We use straight line method. If you take accounting 2, you will definitely go into the 2 other methods the book goes through. But for the purpose of this class, we're going to stick with the easiest and most straightforward approach. So we have our purchase price. Say we purchase a house for $100,000. We think when we move out, we can get $10,000 for it. That would bring our book value down to $40,000. We're planning to live there for 10 years. So we'll divide our 40,000 by 10, gives us $4,000 annually. And then in this class, we want to know monthly depreciation. So you would divide the annual by 12. Quickest, easiest way to calculate depreciation. So here is where we get back to our vending commission from the very first transaction you're going to have
Hey,
to
Amanda.
do. Yes.
If you don't mind, can you go back one screen real fast? I was writing down those
There you go.
formulas. Thank you so much.
You're welcome. While you do that, I'm going to take a drink of water. Just let me know when you're ready.
Okay. Okay, you're good.
Okay. Yeah, the book also has it on page 182 if you lose your notes. Just so you have that as well. Okay, here is where we get back to our vending commission revenue transaction, the first transaction that you have to do for the month of May. So the total sales were $2,300. 10% is earned on these sales. So what is 10% of $2,300? Easiest way is just take off the last zero. So how much were we paid on the first transaction? If you remember. Tuesday night, by this point, they did not remember. Close. We were paid $200 for a check. We were given a check for $200 for what they assumed would be our commission. So since we earned $230 and they only paid us $200, how much is our adjusting entry going to be? So we were paid $200. I'm horrible with the pen on the computer. So we earned 230, but they only paid us 200. So our adjusting entry would be $30. And let me give you a clue. You will not adjust your cash account. You're going to adjust the revenue account and accounts receivable because we're still waiting on the snack company to pay us our $30 that they owe us. So we're going to credit accounts receivable. We're going to debit accounts receivable and credit our vending commission revenue. So that is one of the more commonly missed adjusting entries. Students see the number 2,300 and they automatically assume that that's the amount that should be adjusted for. So again, reading carefully is very important on this project. Here we go with the boats again. Do either of you remember how much the depreciation was in April? Of course, I tell you the amount, but whoops, let me go back one. So our depreciation for April for the boats was $1,000. We purchased 2 new boats for $9,000. Those have a useful life of 5 years, no salvage value. So we need to figure out the additional amount of depreciation for the 2 new boats. So to do that, we're going to take our $9,000. And again, the boats are going to be they're going to be donated like the additional ones that we purchased last month. So we have our 9,000 divided by 5. Which gives us 1,800. Which does give us 150 for the month. So we would add those two amounts together. So we'd have the 150 plus the 1,000. And that gives us our complete depreciation for the month. We just do one entry for the entire amount. So does that transaction make sense? It's a little different than what we're used to when we calculate depreciation. Okay, some more depreciation. So we purchased surround sound system. It's like the second transaction we do for the month of May. $3,600, no salvage value, useful life of 5 years. What is our adjusting entry going to be for? Kayla is faster than I am tonight. Once you get the hang of straight line depreciation, it is fairly simple and straightforward. Pardon the dogs in the background. It's a crazy night at my house. Exactly, you guys are both right. Another straight line depreciation. They purchased a big screen TV. They obviously have way too much money to spend. I'm not sure I could handle spending $8,000 on a TV. So how much would our depreciation be? Waiting on one answer. Make sure you're not calculating yearly depreciation. You need monthly depreciation when you do all of your adjusting entries. Everything is focused on just the month of May. So in this case, the dogs are playing. So it is $75 for the month. Next one, we purchased a building for $530,000. I am so sorry about that. They're supposed to be in the backyard playing. So how much would our monthly depreciation be? If we purchased it at $530,000, we're gonna sell it for $50,000, and it has a useful life of 50 years. Great job. Most buildings usually have a useful life of 30 to 50 years, depending on how new it is when you purchase it. So you guys are doing great so far. Now, this one is interesting. Last quarter, a student calculated the amount in a way that I had never thought of before. I love learning new ways to look at things. So on April 2nd, which would be the month that's due for this week, Knight paid $9,000 for insurance during the 6-month camping season. May's portion of this premium was used up during this month. How can we determine how much this month's insurance is? There are multiple ways to calculate it. What do you think would be the easiest? So, Kayla, you said 1,500. How did you arrive at that? 9,000 divided by 6. When I did put this question in, when I originally put this question in the presentation, I was thinking, okay, let's just go back and look at how much we paid in April. I assumed that would be the easiest way to calculate it, but this last quarter students did exactly what you guys did, the 9,000 divided by 6. Me not thinking students would want to take some time and do more calculations, I assumed they would just go back and look at April's, but no. So that, when they said that last quarter, I was like, I never thought of that. So learn something new every day. So the last adjusting entry that we're going to do, this goes along with the 3 magazine subscriptions we purchased. Since we purchased 3, how much are we going to adjust for? He received 1 month's worth of magazines. So how much would we adjust just for the May magazines that he received in May? Exactly. Students either do the whole 120 because that's what he purchased them for, or if they only put in the $40 in the journal as the actual transaction price, they'll put $3.33. So make sure that when you do your adjusting entry, you do it for the $10, or your amounts will again be completely off. Are there any questions on any of the adjusting entries? Okay. Again, you will need to calculate straight line depreciation when you do your after conference assignment. That's just to let me know whether or not you fully grasped the concept, which I'm positive you guys did, but it still gives you extra practice. And again, if you have to take accounting 2, you have a head start because that's one less depreciation method you actually have to learn. Okay, closing entries. Again, they are the standard closing entries that you can find in Chapter 6, except for that you will have the 2 revenue accounts that will be closed to income summary, and that will be one transaction. If you put it in 2 different transactions, I will not count that wrong, but technically it's supposed to be one transaction. So as long as you have the amounts, the ending amounts correct, I'm a happy camper, because these comprehensive problems are not as easy as you would expect, and they are incredibly time consuming as well. So remember your acronym. That's going to help you know the order to close. Also, the demonstration problem in Chapter 6, which is page 197 to 199. They go over the entire closing process as well. So if you forget, that's there to help you as well. Financial statements. again, nothing new. When you do your when you do your financial statements and you do your balance sheet, make sure that when you do your property, plant, and equipment, you list one asset. So for example, you'll list the fishing boats, then directly underneath that, you would list the accumulated depreciation for the fishing boats. Then you would list the next asset, say for example, the lodge. Then you would put the depreciation expense for the lodge, and then you'd keep going in that pattern until you're out of assets. So make sure you follow that format instead of listing all of your accumulated depreciation in one lump sum, because that will lose you points. I've had students do it that way in the past. It doesn't lose you a lot of points, but at this point in the course, some students need all the points they can get. So just a reminder to make sure you format your financial statements correctly. Any questions before we move on to the wrap up? And then we're going to go over final exam information. Okay, your April comprehensive is due this Sunday. I will try to have those graded Monday. I have a meeting Monday morning, so it may be late Monday when they get done, but you will have the post-closing trial balance amount, so you could go ahead and start on May's. That is due the following Sunday. I will email you the passcode for the after conference assignment, as well as a picture of the post-closing trial balance tonight before I turn off the computer. The final begins the 19th at 12:01 a.m. if you're so inclined to do a final at midnight, until Sunday, March 25th at 11:59. Once you click the start button, you have 120 minutes to finish the exam. You cannot stop the exam and start again later. You have to finish it once you hit the start button, so plan accordingly. I don't know if you need to go to the library, get the kids a sitter, send the kids next door, send the significant other somewhere else so they don't interrupt you. But once you begin it, you have to complete it. There are 13 questions worth 10 points each. The first two are multiple choice. Everything else is pretty much short answer. There will be an Excel file that you need to download. I will have it loaded in the final exam. When you click to start the final exam, I will have it loaded there so that you can download it. You will need that to answer questions 3 through 13 instead of entering them in the text box that the exam gives you, because it's going to ask you to do financial statements, journal entries, and they give you a text box to complete it in. So I created the Excel file, so it's more like what you're used to when doing your homework. And that way you don't have to worry about trying to line up the lines, make sure you have everything where it needs to be. So you will need to download that Excel file, and then you will need to email that to me within Canvas once you hit the submit button. So it needs to be almost instantaneous, but I will give you a little leeway. Submitting the file via email the next day is not going to work, and I have to have the Excel file by March 25th at 11:59 or I cannot accept it. So that is a key that you will need to do. There are 2 final exam reviews listed. in week 12. The 12.1 exam review is the one that I posted today. It gives you more specific information than the one that was listed, and it gives you some specific problems to look at to help you with studying for your exam, because your exam is closed book. So I try to give you as much help as I can before you go to take your exam. Any questions on the final? Any questions about the comprehensives, either April's or May's? Okay. I will get the passcodes and picture out to you. Probably, I should be able to get it to you by 7. So if you want to do that tonight, be my guest. And Kayla, I will look at your comprehensive as soon as I send out the passcodes. And if there are no questions, that is really all I had for this evening. You guys can enjoy the rest of your Friday night.